now. So you can all see that the record button is on. So Drew's he's gonna take questions to begin with. So any questions you may have on the SUS or the, what was the other one?
The temporary wage subsidy.
Yeah. TWS. You can unmute yourself and ask your question. You're welcome to put it into the chat. Then he's going to go and talk about the changes from October 9th and some of the other supports that are out there. And then as questions come up, you can either put it in the chat or Drew will sort of call for questions at different points throughout his discussion, and you'll be able to unmute yourself and come on in and ask him your questions yourselves. So I think, Drew, we might as well kick off. And I really do appreciate you being here. Thanks so much. And let's get going. I don't see any questions in the chat yet. So if you want to sort of just go on with your presentation, and as people have questions or if they have previous questions, I'm sure they'll ask.
Sure. So we'll start right into the Canada Emergency Benefit Account. My apologies for running over last time. I wanted to make sure we covered the programs. So we had the vote, and I think it was about 80% of the people wanted to go into detail. So we went with the democratic system and went through those programs in detail. So the last part of the I guess two pieces that we didn't get to last time. The Canada Emergency Benefit Account. So that's the $40,000 loan. Then I'll talk briefly about the announcement from October 9th. There's still not a lot of details on those programs, so I'll give you what I have, and then if there is an update, I'll send it to Sandra and she can spam it out to everybody. So on the Canada Emergency Business Account, this one started out as a $40,000 interest-free loan. That loan is 25% forgivable, provided you pay back $30,000 by December 31st, 2022. It is interest-free until that time. If you do not pay it back, then it rolls over into an interest-bearing debt. And the interest rate on that is actually fixed. It's quite high. So I've been encouraging all of my clients that have taken this funding, make sure you get that loan paid or have alternate financing lined up to repay that debt. The initial way that this program was set up is you had to have $50,000 worth of payroll in order to qualify for this loan. So the eligibility requirement should be on your screen there. You had to have a Canadian operating business effective March 1st, 2020. You had to have a federal business number registration. You had to have filed a 2018 or 2019 tax return. Now, since our last discussion here, I've run into a few businesses where they were incorporated in 2019, and we were just waiting actually to file the 2020 tax return. So if you are in that scenario, a little tip for you, consider filing a stub year for your first year, just so that you get that 2019 tax return filed, which will bring you as eligible for this program. So even if it's just a 1 week return, very little income, some startup expenses in there, file that 2019 return and that'll get you in on this CEBA loan. And then that'll set your year end here for 2020. So if you're flexible on your year end, then that's certainly an option for you. You have to have eligible non-deferrable operating expenses between $40,000 and $1.5 million. And we'll get into what eligible non-deferrable expenses are once we get into more details on that non-payroll stream. You have to have an active checking or operating account, and it's your intention to continue your business. So you can't just take these funds, pocket them, and hold your business up. And then the very last one, you have to agree to participate in post-funding surveys. So similar to the wage subsidy program, you had to let CRA know that you were willing to actually participate in some surveys and have your business name published, that sort of thing. So after the initial program came out at 50,000, they realized that it's actually blocking out a lot of businesses. So most businesses that are kind of in that startup phase or owner managed, they don't pay themselves a salary right off the start. If the business can't afford it, they aren't taking it out. And if it can afford it, they're taking it out randomly throughout the year. It might not be run through payroll. It could be through dividends. So they dropped that 50,000 down to between 20,000 and 1.5 million. And again, we had another learning opportunity since our last discussion here. And when they say between 20,000 and 1.5 million, I wouldn't recommend, if you have the option to do this, setting your salary at $20,000. I would go $20,001 because you will actually get denied your application if you're $20,000 payroll on the nose. So then again, they realized that, wait a second, we're excluding too many people even by dropping that payroll limit down to 20,000. So they opened up what they call the non-payroll or the non-deferrable expense stream. So even if you don't have payroll, you can get in. Unfortunately, it's just a lot more of a painful process to get your funds. So applications for this $40,000 is done through your regular bank stream. Most of the banks require you to set up your online banking in order to apply for this. There's some banks, I believe TD is one of them, that don't require you to use your online banking. You can just apply through their general website. The information that you'll need to apply for this, if you're going through the payroll stream, you'll need your payroll account number, your business account number, your business account name. So that payroll stream, it was a pretty seamless process at the start. Like I said, business name, business number, you needed box 14 from your T4 return, which is your gross wages paid during the year. Then there's a long legal agreement that you have to read or just scroll through it. And again, I suppose something that I learned through this process is it's actually a justifiable defense not to read those agreements. So if you choose not to, there you go. Bank account information, you check off a box and your money was in your bank account. It was just that easy at the start. But moving into that non-deferrable expense stream, it actually, it requires a lot more from business owners. You have to provide a lot more information. So you actually have to provide support for your expenses in advance before they will provide you with the funding. Now, on the screen here, it has a definition of what an eligible non-deferrable expense is. So it has to be incurred or expected to be incurred between January 1 and December 31st, 2020. So limited time horizon there for you. In addition, it has to be legal or contractual obligation that existed on or before March 1st, 2020. So we've run into some issues, and one of the questions clients have been asking me is, do your accounting fees qualify for this? Well, we've actually had a situation where we've had to submit our standard engagement letter, which, if it's dated prior to March 1st, is a legal contract with our clients that they are engaging our services. And in that case, then we can get the accounting fees as an eligible non-deferrable expense. If you don't have that engagement letter, from the sounds of it, CRA is going to actually deny those accounting fees as well. Wages and other employment expenses to arm's length third parties. So this means that the wages that are paid to shareholder employees are not going to qualify under this eligible non-deferrable expense route. Rent and lease payments, insurance costs, fees required in order to maintain your licenses, and then materials consumed to produce your product. I do have a document upload instruction guide. The name at the bottom left-hand corner of the screen there, see the document upload instruction guide. If you just Google that, it'll go through and it'll have a lot of these details on here for you. So on the right-hand side there, it has documentation required. Your forecasted 2020 eligible expenses. So an example of this is maybe your internet, your phone bills, your utility bills, that sort of thing. When you're submitting your application, they will actually allow you to forecast what those will be going forward. So if you have a standard fixed monthly contract fee, they aren't only going to allow, what you paid up until October, you can also forecast what November and December are going to look like. And there's a formula in that upload instruction guide on how to calculate those. You do have to actually deduct from your eligible non-deferrable expenses here any amount of funding that you've received from the Government of Canada. So if you've received a wage subsidy, that has to come off your wages paid. As far as bills and invoices and agreements that are required. So if you are submitting wages as part of your non-deferrable expenses, they will require a pay stub and an employment agreement with your employees. showing that this employee was an employee prior to March 1st, and the pay stub to support that, that was the actual amount of wages that were paid. A rent and or lease, you will need your rent or lease agreement, again, showing that you were contracted with your landlord, that you did have an agreement in place to pay that certain amount of rent on a monthly basis, and as well as the invoice for your monthly rent that was paid. If you were receiving the rent subsidy that was out in, I believe that was April, May, June, and then it was extended July, August, September, that rent subsidy will have to come off of the amount of rent that you paid in order to be considered an eligible non-deferrable expense. So if you have 75% of your rent forgiven, your other 25% will qualify under this program. Insurance, so they are requesting a policy and a contract as well as support for payment. Property taxes, you'll need your property tax bill from either the city or the county. Phone and utilities, I talked about that before, you'll need your contract as well as your invoice. Debt service payments qualify for this program as well. So if you had any loans in place that required you to make regular payments, you have to you have to provide them with that loan agreement as well. You can provide an invoice from the lender for your monthly payment amount. Any contractor fees, again, this is where accounting services would fall into, legal services, that sort of thing. If you had an agreement in place but prior to March 1st, they will fall in here. If you have subcontractors that you use for jobs, there has to be that subcontractor agreement and invoice provided. And then any materials, you have to have an agreement to pay and an invoice, and that agreement to pay has to be dated prior to March 1st. Just reading through, I think there's a question here.
There's actually a couple, so let me just go back up to the top. I just wanted to ask a basic question to confirm. The TWS is basically available to everyone, correct?
Yeah. Anybody who had payroll between March 19th and June 18th can apply for the temporary wage subsidy. That PD27 form, if you're applying for it, you have to file that form.
Okay, the second question of that was the CEWS is available if you had a 30% decline and changes every month or whatever, basically no decline, no CEWS, is that correct?
So for the first four periods, you had to show that bright line decline, that 30%. Well, actually in March it was 15%, and then April, May, June, it was 30%. Come July and August, any decline would get you qualifying, and it's a multiplier of your decline. And that multiplier is based on the period. So it started out at 1.2 for July and August, went down to 1.0 for September, and it's at 0.8 for October. And when we get into the extended CEWS program, it should carry forward at 0.8, well, until December, and then who knows until after that.
Okay, and then the next question is, do you know if you received the CEBA in the first round before you had to detail your non-deferrable expenses, can you use it for shareholder wages?
So that first application process, it was so vague and the rules were not out there yet. The definition of non-deferrable expenses wasn't even available at that time. So it didn't have any of these rules or stipulations. It was, do you have 50,000 of payroll? Are you registered as of March 1st? Have you filed a return in 18 or 19? And it was go from there. So it's my understanding now that they have this all defined and set out. It's actually part of the contract now. It says that you have to spend this on eligible non-deferrable expenses. So yes, you've received the money. However, in order to get the refundable portion, you may end up being audited on this program. They may ask for support for your eligible non-deferrable expenses. As far as whether shareholder wages are allowed, that is completely unclear now. I want to say yes, because there were no rules or guidelines at that point. Under the non-payroll stream, the non-deferrable expenses, it's specifically disallowed. So New program, I would say, no, they're not eligible. Old program, I would say yes, with a caveat that if you're audited, who knows what they're going to do with it.
Okay, looks like Joanne maybe has a question. She's unmuted.
Okay.
Joanne, did you have a question? Nope. Okay, I'll mute her. Then there's two other ones. Can you still use the TWS for previous payroll if you didn't withhold those funds from your remittance in March to June?
Yes, so that temporary wage subsidy, we actually encouraged our clients not to withhold those funds if they didn't need the cash flow at that time, just because it was really unclear how you were going to apply for it and everything like that. So when you file that PD 27 form, what you're going to do is you're going to put in your number of eligible employees. That'll set your one limit. You'll put in your payroll between March and June, and that'll set your second limit, and your third limit's the 25,000. If you haven't claimed anything at that point, what you do is you write in the comment section what you want done with those funds. If you want it credited to your payroll account, or if you want it refunded. I will tell you that I have submitted 2 of those PD 27 forms back in September. One might have been late August, one was in September, and they still have not yet been assessed or even looked at by Canada Revenue. So it's taking quite a while. I don't know if they're going to have those credits in the account in time. I hope that they have them by February. That's why I'm encouraging people, file that PD 27 form now. The earlier that you do it, the better the opportunity is to have that credit in your payroll account or get your refund back.
Okay, one more question. If no TWS was claimed and CEWS was taken, can that be applied for now?
Okay, so if no wage subsidy was claimed and then you filed your CEWS claims, when you file your CEWS claims, you have to put in how much temporary wage subsidy you claimed. If you put in 0 on there, you would have got the full 75% back through your CEWS refund. So when you go to input your temporary wage subsidy form, that PD 27, which you still have to file that PD 27 in that instance, you can just note on there that it's been claimed through your CEWS, and there won't be any issues that way. So the CEWS program, you can get 75%. However, you can't get 85%. It's not like you get the CEWS 75 plus the temporary 10. It's maxed at that 75. So if you already got your full 75 through CEWS, technically you've already got your 10 from the temporary wage subsidy, and there's you just file that form to let them know. Okay, so the questions have been addressed there.
Yep,
We'll wrap up. Pardon me?
You got all those questions. You answered all of them. Thank you.
Okay. Yeah, so we'll continue on the Canada Emergency Benefit account here. So I've just flipped forward one slide here, and it shows on the right-hand side what they consider invalid supporting documents. So they don't want to see financial statements. They don't want you to send in a copy of your financial statement saying, here's my 40,000 of expenses. I have more than that. They actually need all of that detailed support behind those expenses. Any invoices prior to January 1st, 2020 will be immediately thrown out. Any invoices from contractors after March 1st, 2020. Now, caveat that with, if you had a contract in place where it was a monthly fixed fee, then you will be okay. Handwritten documents. For some reason, they will not accept handwritten documents. I don't know what the difference between typing up a rent invoice on Word or Excel and handwriting it is, but for some reason, handwritten documents are specifically stated as not allowed. They don't want any check images sent, so do not scan your check showing support for payment. They do not want your bank statements or transactions. Quotes or proposals will not qualify. They don't want your credit card statements. Your T4 summary will not get you in as, here's what I paid for wages prior to, or sorry, I should say prior to 2020. So your 2019 wages. They don't want your T5018 summary, which is a summary of contract payments. CRA payments do not qualify. Your taxes, your GST, that sort of thing, do not qualify under this program. So those are the items that they do not want. We already went through what they are looking for. So some tips when you're applying for this. Don't stop your non-deferrable expenses at $40,000. So when you're uploading documents, if you have non-deferrable eligible expenses up to $100,000, get up to 50, 60,000 in there just in case they throw some out. Now, the reason that I'm saying that is it's taking over 2 weeks to hear back from Canada Revenue Agency when they deny it on what was denied and what additional information you need to submit. So try to make it clean and clear the first time through, just to make it a smooth process to get that money in your bank. Thoroughly review your documents and that required documents listing. It looks like Lisa posted a link to that document upload instruction guide. Look at that. Vet every single document that you're planning on submitting. Make sure you are giving them proper support. Like I said, it just slows the process down. It's hard to get in contact with anybody at CRA now. Their agents are still working from home and their voicemails are still at the office. So they are not getting their voicemail in time to return your phone calls on a timely basis. So I guess last thing on this CEBA program, if you are denied from the CEBA program, that's not the end. If you can access the $40,000 through the Government of Canada, Canada Emergency Benefit Account, there is another option. So you can go through this Regional Relief Recovery Fund. Can you see that on the screen, Sandra?
Sure can.
Okay. So if you're denied from CEBA, that's actually one of the requirements of this loan. So if you see kind of midway down the screen there, have applied and were declined for funding from the Canada Emergency Benefit Account, or were not eligible for CEBA funding, that slots you right in for this Regional Relief and Recovery Fund. Now, one of the other things in here is are not located in a rural area serviced by Community Futures Office. We in Medicine Hat are, so at that point, you can contact Community Futures. Community Futures is administering these funds, so if you are denied CEBA, there's other options out there. So I think that's all I wanted to touch on the Canada Emergency Benefit Accounts. It's really, I mean, if you have the legitimate expenses, the process it's neat, it's clean, the money goes in. I know some banks are treating it differently. Royal Bank, for example, is giving you a line of credit. So just because you get approved for that doesn't mean that you have actually drawn the funds. So if you are going through Royal Bank, it is my understanding that you need to draw that full line of credit up to $40,000 prior to December 31st, 2020 in order to qualify for the forgivable portion. Make sure you get that money out of there. I have also encouraged my clients not to pay any of this back until, well, I mean, ideally don't pay it back until December 31st, 2022. It's 0% interest loan. You might as well take advantage of that. There's no cheaper funds out there. But if you are getting anxious and you do want to pay it back early, I'm skeptical if you pay it back before December 31st, 2020. If you pay it back prior to that and you don't have a loan outstanding, then you might not be eligible for that 25% forgivable portion. So might as well ride out this interest free as long as you possibly can. Do not use that money for dividends, buying a truck, buying a boat, repaying other debt. It all comes down to the wording when you're asked by CRA what you use those funds for. Provided you meet the criteria, you spent it on non-deferrable expenses. Your other operating money was used to buy the truck or pay down your other debt or whatever. So make sure if CRA does come looking, use the proper verbiage when you're talking to them on what you use those funds for.
Mark. There's a couple of questions. And I'm not sure, I hope if you've already answered them, please tell me. If you claimed CEWS and put the amount of the 10% wage subsidy, you would file the PD 27 for the 10% amount. Is that correct?
Yeah. Yeah.
And is the documentation required for the CEBA if audited, or has it been, or does it have to be sent in at year end?
So if you're going under the payroll route and you haven't had to provide any support for your CEBA loan, then at that point, you might be required to provide additional documentation to support your spending. For all of those who are going under the non-deferrable expense route, they've essentially audited your documents as you sent them in. So you should be pretty safe. Obviously, you have to keep your documents for up to 7 years in case you're audited by Canada Revenue Agency. So make sure you keep everything around. But yeah, that payroll process, I would keep those documents readily available.
And it was noted that that the RRRF was fully subscribed. I just wanted to let everybody know that there's been more funds allocated to that. We don't know exactly when they're going to be released to us to release out, or exactly how much it will be, but they are taking applications through the Entrecor website right now.
Good to know. All right. So provided we've answered questions and gone through the CEBA program, if anybody has CEBA questions, feel free to throw them up in the chat in the meantime. Canada Emergency Rent Subsidy. So this program is not available yet. It's kind of in its initial stages. I believe it's being tabled and it should be discussed, I think, next week. But it's replacing that Canada Emergency Rent Subsidy that came out that required a 70% or 75% revenue decline that was administered actually through the landlord. So this new program here, it's actually the tenant that is going to be applying for this rent subsidy. They've announced that it is going to be available until June of 2021, and it's designed to cover what they've called eligible fixed property expenses. So that'll include rent, if you own your property, interest on the mortgage that you pay, and then they've stated that more details will be coming out on what qualifies as eligible fixed property expenses. So similar to in that CEBA account, the non-deferrable expenses, they'll outline exactly what qualifies. This is being provided directly to the tenants. The funding will go back to you, very similar to the way the Canada Emergency Wage Subsidy is being administered right now. It will cover up to a maximum of 65% of eligible expenses, provided you have a 70% decline in revenue or more. If you do meet that 70% test, then you're eligible for a top up, very similar to the wage subsidy, of another 25%. So you could get up to 90% of your rent or commercial property expenses covered here. It will be a sliding scale like the wage subsidy is now. So if your revenue decline is not 70%, if it's less than that, say for example, you're at 50%, then you'll still be eligible for a subsidy. And that subsidy will be using the multiplication factor, just like the wage subsidy. And that factor is going to be, I believe, 0.8. So if you have a 50% decline, you'll get a 40% subsidy on those expenses. That one, the top-up subsidy, that 25% in addition to the 65, is for organizations that are subject to a mandatory public health order to shut down their business. So max, if you're not ordered to shut down, 65. If you are, you can get up to 90 covered. More details on that are to come. The announcement came out October 9th. They seem to be slow moving on this one. I'm doubtful whether it's going to be available here before the end of November. I'm hopeful that it'll be in December, but more than likely January. However, it is going to be retroactive. So you will be able to apply for the first period starting September 27th to October 24th. and this is the part that just kind of irritates me about it. I don't understand why they aren't doing it monthly. They're doing 4-week blocks. Everybody pays their rent monthly. The mortgage payments are done monthly, but for some reason they're doing 4-week blocks. So it should mirror the wage subsidy periods going forward here. So that's the rent subsidy. On the wage subsidy being extended, this again, they've announced that it will be available until June of 2021. So they are going to continue the base subsidy rate from the September 27th to October 24th period, which is that 0.8 multiple. Originally, it was going to go down to 0.4 from October 25th until November, whatever 4 weeks after that would be. But they've decided to hold that level there. And they have also put into place those same safe harbor rules that they had when they switched the program in period 5 going forward, that there's going to be a couple of periods where you can use the old rules or you can use the new rules, whichever provides you with the maximum benefit. There is still going to be the top-up subsidy that is available if your revenue decline exceeds that 50%. So they've clarified the rules up until December 2020. And again, this one is tabled hopefully for discussion here next week, and then it'll get legislated and passed here. But we can expect this until June of 2021. The last one is the Canada Emergency Business Account. So we just talked about that $40,000 interest-free, 25% forgivable loan. They've expanded this by an additional 20,000. So there is up to 60,000 that is available. The additional 20,000, half is going to be forgivable. So out of the 60, you can potentially have 20 that you don't have to pay back. The deadline for application, which good for us, we had this conversation in October, but the deadline originally for application for this program was October 31st. They've extended the application deadline to December 31st, 2020. So if you haven't applied for that account yet, make sure you get your applications in here in the next 2 months. Again, just like the PD27 form, sooner than later is always better. If you have the information, you might as well get it in there, get the application process underway so that you can get the funds in your account and you don't miss that deadline. And this new 20,000 is still going to be interest-free until December 31st, 2022.
Can you still get the 40,000? Oh, if you already got the 40, can you get the additional 20?
Again, not legislated, but it's my understanding that you have to have applied and received the 40 in order to get the additional 20. So there's another reason, apply for the 40 right now, get it in your bank, so that if that is the rule, now you're standing in line for that other 20. Otherwise, you're not even in the queue. So get your $40,000 CEBA applications in there because you actually could be doing yourself a disservice by not applying for it. All right. So not on the slides here, but I figured I should talk about some of these other government programs that are available. Not business related, but I mean, if we can help our employees out, try to look after them or our employees' families, it's good to be aware of these programs. So the Canada Recovery Benefit, similar to CERB that initially came out, $500 a week for up to 26 weeks if you've stopped working or your income has reduced by 50% due to COVID and you are not eligible for EI. So for those business owners, if you shut down and you're not earning any income, there's the Canada Recovery Sickness Benefit, again, $500 per week for up to 2 weeks if you're unable to work because you contracted COVID, you're self-isolating or have underlying conditions that make you more susceptible to COVID. The Canada Recovery Caregiving Benefit, again, $500 a week. This one is up to 26 weeks per household. If you're unable to work, at least 50% to care for a child under 12 because schools, daycares, or other care facilities are closed. or they're high risk or sick. So those are some options. Hopefully we don't get in the scenario where businesses are starting to close again. But just know that there are those options available out there. I know we've heard of, well, Medicine Hat up to 15 cases here. So there's been a lot of people that have been in close contact. They're required to quarantine for 14 days. If they can't work during that time period, that Canada Recovery Sickness Benefit, there's options there. I suppose some other items that you might want to look into. CERB is still, period 7 is still available. Mortgage deferrals, talk to your banks. If you're having trouble making mortgage payments, they can help you. I believe they're offering up to 6 months. There is the Workshare Program. The Workshare Program was initially set up, I think it was 38 weeks, and they extended it to 76. It's quite a complex program, but if you're having people share positions rather than lay one person off, it may be a good option to look into that Workshare Program. As far as layoffs, back in March when everything was closing down, there was a bit of a rush from employers asking what they can do. Temporary layoffs were previously 60 days in a 120-day period. And then at that point, you'd be responsible for paying severance. Due to COVID, they've actually extended that period. So it's actually been to 180 consecutive days laid off before severance has to be paid. And then we talked about the Regional Relief and Recovery Fund already. So those are just some of the other programs that are available out there. Continue to check CRA's website. They have constant updates on these programs. Maybe there's some other programs that we didn't talk about here today that you fall into that could help you out and help you get through these difficult times here. That is all I had for today. I don't know if I'll scroll through the questions, see if I missed anything. So it looks like Lisa posted here that soon you should be able to access that 60K. Hopefully that's available soon. We can go to the next slide. Sorry, I didn't have all those other programs on slides. I can add it and then send it out to Sandra. The Workshare Program. Yes, Corey, you're correct. That Workshare Program takes a lot longer than you'd expect to set up. You have to get approval. It's a longer drawn out process, but if you are in that Workshare Program, it improves the benefits that are available to your employees. So if they normally get $400 through the EI program, through this Workshare Program, they can earn $400 and they might be eligible for an additional $100 through the Workshare benefits. So it benefits your employees, but it may not benefit you as a company. That's another thing that you would need to consider. Any Workshare benefits need to be deducted from your wage subsidy claim. So if you are going to go into that Workshare Program, do your homework, do your research, calculate the benefits, and see if it's worthwhile. So Janet has asked, when do you have to pay tax on the $10,000 forgivable portion of CEBA? So I have been operating under the assumption that $10,000 is not forgiven until repaid. And once it is repaid, then it becomes income. Until that point, you don't know if the $10,000 is going to be forgiven or not. So when you make your repayment and you get notification from the Canada Revenue Agency or whoever it is, then at that point, report it as taxable income. The comment on here says CRA site says it must be taxed in the period it's received. So up until now, it's received as a loan. That $40,000 is reported as debt. And then when it's actually realized and that 10,000 comes in, that's when we're reporting it as taxable.
I'm not seeing any other questions. Oh, it can be adjusted for you if you don't get the full amount forgiven. It says CRA site says must be taxed in the period is received and can be adjusted for if you don't get the full amount forgiven.
Okay.
I don't know what that means.
You just amend your return or adjust on the future return.
Perfect. Any other questions from anyone? Can you speak to new hires under CEWS? Any other conditions for a new employee compared to one already employed?
So for arm's length employees, if you are not related to the shareholder, they're no longer requiring that baseline calculation for new hires. However, for non-arm's length employees, you're related to the shareholder. If you don't have that baseline payroll set up, then unfortunately your subsidy is zero. So without a baseline, they don't want people hiring on family members paying them a wage and getting 75% covered. The way that the calculation works using the Government of Canada, CRA, has provided their own spreadsheet for calculating your CEWS. It'll give you what your benefit is on those new hires. So it's limited to 75% of their eligible wages up to a certain amount.
Okay.
Sorry, go ahead.
If a previously laid off employee is rehired, can their wage qualify for CEWS if they were not paid for the period they were not employed?
So I think there's two questions on there. I think they're probably both looking at the same thing. So the one is, I believe there's stipulation that an employee had to work a minimum number of days in that CEWS time period. Is this still the case? Then if a previous laid off employee is rehired, can their wage qualify for CEWS if they were not paid for the period they were not employed? So those questions are both pretty much the same questions. In periods 1 to 4, they had this 14-day period in there where it said if you did not earn income for a period of 14 days in that wage subsidy period, then that employee was not considered eligible for the wage subsidy. And they removed that requirement in period 5 and going forward. The reason for that 14-day period was if you weren't paid for 14 days, you would be eligible for CERB, that $2,000. So going forward, I mean, they can be paid for 1 day in this CEWS period and still qualify for a wage subsidy. So in that case, if a laid off employee is rehired, as long as they earned income in that CEWS period, yes, they're eligible. We're talking about 28-day periods. If they have 1 out of 28 days, their wages in there, it's eligible to be claimed. Again, assuming that they're arm's length employees.
Mm-hmm. Well, that looks like that is it for questions. Drew, do you have anything else you want to talk about?
No, I think that was pretty much all I wanted to cover. If any other questions come up, I don't know if you have my contact information, give me a call, send me an email. I'll do my best to help you out. Or get in touch with Sandra and she can forward the questions on. I mean, I'm doing my best to try to help everybody out and try to make sure that everybody gets through this and gets whatever benefits they can, so that hopefully once this is all done and we have a vaccine and life goes back to normal, hopefully we're all out on the other side in the best financial position that we can here.
Wonderful. Okay, well, you know what? Thank you so much. I know this ended up being longer than we had originally anticipated, but I appreciate the time that you've put forward, Drew. I did send out the slides. I did send out a lot of the links. Lisa has put a number of links up on the participant board today on the chat. Thank you so much, Lisa. And again, like Drew said, if there's any questions, you can certainly forward them to me and I can send them off to Drew. And this one actually did get recorded. So So I will put it up onto the Apex YouTube channel as soon as it finishes downloading. Hopefully, I got my fingers crossed. So thanks everybody for being here. And Drew, thank you again so much for being here. Really appreciate it. If there's anything else that you want to talk about at a future date, Drew, I'm sure we'll have lots of people sign up for that one too. So let's keep in touch on that.
Sure, sounds great. Thanks for organizing this, Sandra.
Thanks everybody for showing up.